Good afternoon. I'm Elise Bullock, the Assistant Director of Economic Industry Analyst for the Department of Navy Office of Small Business, led by our distinguished Director, Mr. Jimmy Smith. On behalf of Office of Small Business Programs, we thank you for joining us today. We started this webinar series during COVID-19 pandemic as a way to continue outreach. With such an amazing response, the Department of Navy Office of Small Business will now transition to a Lunch and Learn series. Our goal is to keep our audience connected and informed while providing timely and relevant insight on the topics impacting the Department of the Navy small business community and our partners by hosting at least 2 webinars per month. The Department of Navy recognizes small businesses are the catalyst of innovation, and we use this platform as a way to attract new business partners. You can view our previously recorded events on our website under Outreach and Past Events tab, or visit our YouTube channel. I would like to direct you to our website, www.satnav.navy.mil/small business, where you can find a wealth of information, including our Department of Navy Office of Small Business Operation Plan, locate your small business professional, and find information on how to do business with the Department of the Navy, including the Command's long-range acquisition forecast. To stay current on the Department of Navy upcoming events, you can register for our mailing list on our homepage of our website. To stay up to date about upcoming industry days, Command's outreach, and in general, what's happening across the Department of the Navy. I also encourage you to connect with us on social media platforms, including Facebook, Twitter, LinkedIn, our social media platforms. Today we have a dynamic speaker, and I hope you seize the opportunity to ask questions using our Q&A feature on this platform. Today we have Mr. Joseph Greger. He is he's with the Defense Contract Audit Agency. Mr. Greger is a small business program manager and is located at Dcaa headquarters in Fort Belvoir, Virginia. In this capacity, he serves as the program manager and an audit expert for small business programs with responsibility to provide assistance, consultation, and internal controls with regards to audit requirements and their application to small business. Mr. Greger is a graduate from California University of Pennsylvania with a Master's of Science in Business Administration, a Bachelor's in Accounting. He begins his DCAA career as an auditor at the Herndon Branch Office in Northern Virginia. He was promoted to the supervisory auditor, then branch manager at the Springfield branch office. Mr. Greger has also served in the headquarters as the OWD program manager in the operations directorate. Mr. Greger resides in Alexandria, Virginia. So Mr. Greger, it's over to you.
All right, well, thank you for that, Elise. I appreciate that introduction. Good afternoon, everyone. Thank you for having me. I appreciate you attending this webinar or these series of webinars. And I look forward to speaking with you about incurred costs. So I'm gonna go ahead and share my screen, but I think the host or Destiny, if you can you make me a host? I'm not able to share my screen. Oh, here we go. Perfect, thank you.
Okay.
I got it, yes, thank you. Okay, here we go. So like I said, I do have a presentation. It's the incurred cost presentation that I would like to provide. Okay, let me bring this up quickly though. But first, before I do that, I would like to go ahead and just do a quick introduction, a DCAA overview and introduction. I'll make this very, very quick. I realize I've done this so many times, and I'm sure many of you out there have seen this. So I'm going to skip through a lot of this, but I like to highlight, though, which I think is important because, you know, many of you out there are small businesses. So DCAA has organized themselves in a few different ways. So number one, we have what's called regions, various regions throughout the country. And there's 3, Eastern, Central, and Western. And basically what that means is a small business, if you're located geographically, if you're located within one of the regions, then, you know, in terms of DCAA audit cognizance, you would fall under that region. Okay. So if we just take, for example, if let's say you're a small business and you're located in Washington, D.C., or anywhere in Virginia or Maryland, you would fall under the Eastern region. Okay. And again, the same goes if you're a small business located in one of the states. So those are the regions. And then, I mentioned cognizant DCAA office. If you want to know who your cognizant office is, you could always go to our public website, www.dca.mil. Okay, and under the locator tab, you would find U.S. CONUS, and then here you can type in your search. Okay, you can search by cage, by DUNS or zip, and then enter that in, and then you should, your office should pop up. Okay, sometimes this doesn't work. It's not a perfect system. In some cases, if you're brand new, then we don't have any experience with you, so then we're not going to necessarily have your information within our system. So I would just recommend at that point, if you can't locate your office, go ahead and contact me. I can look it up, and we can kind of go from there. Some other things I do kind of want to highlight our public website. We have a lot of resources out there for small businesses. All of the presentations that I personally give, including the incur cost presentation, is out there on the small business website, or I should say the DCA internet, the public internet for you guys. And as you can see on the slide on the screen here, these are the presentations that we have available. So again, encourage you to go out there whenever you can. We have other resources as well. We have guidance. If you're interested in looking at, hey, what is FAR considered allowable versus unallowable? Okay, if you're interested in that, if you want more information on the audit process, the DCA audit process, if you're interested in looking at our audit program, okay, if you're going through an incur cost audit and you want to know, hey, what audit procedures will DCA perform? Well, if you go to our public website, we have what's called the Directory of Audit Programs, and you can, get the one for the incur costs, and you can actually look at the audit steps or the objectives that the auditor will perform. Okay. We also have checklists and tools, to kind of stay on the theme of the incurred costs. We have the incurred cost electronically model, or the ICE model out there. I'll talk a little bit more about that as we get into the next presentation. I also want to point out that our public website has a new small business tab. Okay. So on the far right, you will see the small business tab there. If you click on that, we have links to the small business resources. We also have, I mentioned the presentations, but we also have some frequently asked questions. And we also have a small business seminar link. So all the seminars that I do, this year, I actually have those already established with many of my partners, including Navy Office of Small Business Programs, and they're out there. So if you're interested in attending future webinars, you can take a look at that list and sign up if you like. Many of them, if not all of them, are free, right? A lot of them are actually, conducted through local PTAC counselors, and so all those services are free. So again, I recommend checking that out. Here's my contact information. All right, I encourage you to contact me should you have any questions. It doesn't have to be incur costs, but it could be anything, anything DCA related. Feel free to reach out. Okay. So with that said, let me transition over into the incur cost presentation. All right. Now this slide here, this sort of shows the agenda for today's discussion. We'll talk about due dates and adequacy reviews and all this good stuff, right? I won't go through it, as you can see, but I'll get into the details as we move on. All right. Now with due dates, it's really important with due dates that you submit your incur cost submission on time, right? Well, some of you might be saying, well, when do I submit? What is the criteria, right? Well, the allowable cost of payment clause, FAR 52.216-7, basically states that if you are to receive any cost type contracts, any cost reimbursable type contracts, then you are then required to submit an incur cost submission 6 months after the close of your fiscal year. All right, so that's the standard, 6 months, 6 months after the close of your fiscal year. Now, your fiscal year might be different. Every contractor has different fiscal years, right? In my experience, 90% of the contractors out there have a December 31 fiscal year end. So that would mean your incur costs would be due by July 1 of the following year, right? Other contractors that I've seen, sometimes they'll mirror the government fiscal year. So, you would end 9/30. All right. So that means your incur cost submission would be due by April 1 of the following year. Okay. So that's the standard, right? 6 months after the close of your fiscal year. And again, that requirement is contained in the allowable cost and payment clause. All right. All right. So delinquent submission is now, I've actually seen this quite a bit. A lot of times contractors they don't know, right? They don't know that they have to submit. And so what happens if you're in a situation where you don't submit, okay, for whatever reason, right? Maybe you don't know, maybe you knew and you just didn't have the time. Again, for whatever the reason, if they're delinquent, then what happens is Dcaa will recommend what's called a decrement factor, okay? And then the contracting officer would then make a unilateral decision. Okay, so that decrement factor basically is to ensure that there are no unallowable expenses within your indirect rates. That's the reason why we have that. Okay, moving on. So once you submit your incur cost submission to Dcaa, the first thing that we're going to do is perform what's called an incur cost adequacy review. Right. So it's a big long checklist, and within the presentation, we actually have the checklist here. I'm not going to open up the checklist. It's fairly lengthy, but I do recommend on your own, when you have some time, I would go ahead and take a look at it. You could also, as a suggestion, if you are submitting an incur cost proposal, you're welcome to use this and sort of bump this up against what you have to make sure everything's there, right? But sort of big picture, the purpose of the adequacy review is to make sure all the schedules are included, right? All the information within each schedule is included, all right? And then also, we do tick and tie numbers and amounts, right? Because, and you'll see as we kind of get through the presentation, a lot of the schedules are interconnected, right? So an amount from one schedule should tie to another schedule, right? So those are some of the things that we do. But again, I would recommend doing a self-assessment and your, you can take a look at that checklist on, whenever you have some free time. All right, let me discuss just quickly about some audit requirements. Okay, so FAR 31.2012D, this requires contractors to maintain records and supporting documentation to demonstrate allowability and allocability of costs. All right, FAR 31.205, which is the selected areas of costs. Okay, this requires specific documentation to demonstrate the allowability of certain cost elements, right? And so these two FAR requirements, basically this because contractors must maintain records and supporting documentation, this sort of allows Dcaa to go in and audit those costs, and we have the ability to request records and supporting documentation from the contractor. All right. Now I mentioned 31.205. This is the selected areas of cost. If you haven't seen that, I would recommend taking a look at it. It's actually a fairly large list of costs that FAR discusses, and it sort of defines what is allowable and what's unallowable. All right. So as a very simple example, alcohol expense is unallowable without exception. Okay. Travel expense, on the other hand, first class airfare is unallowable. However, there's some exceptions to that, right? So I think it benefits contractors to sort of, at the very least, have some understanding of that, because, if you're in a situation where you incur first class airfare, if you meet some of those exceptions, okay, then you would be in a situation where you can get reimbursed that expense, right? Otherwise, it would be considered unallowable, right? So these are some examples. So the first one here is 31.205-33. This is professional consultant costs. So typically, if Dcaa is auditing your submission and they audit consultant costs, right? These are the three documents that we would generally ask contractors. So the first is going to be, providing us the agreement, right? So typically, if you consult with somebody, there's going to be some sort of agreement in place, right? That sort of documents, the work that's going to be done, right? The rate of compensation, nature and amount of other expenses, so on and so forth. So that's really important to maintain that. The second will be invoices or billings that are submitted by the consultant. All right. So those invoices typically will, should include some sufficient detail as to the time expended and the nature of the actual services provided. Okay. And then finally, the consultant's work product, right? And other related documents. So again, just understand FAR 31205 does provide specific documentation as it relates to some of these costs. Okay. That's just one example. Here's travel here, right? You want to provide information such as date and place, okay, of the expense, the purpose of the trip. That's really important as well. And then the name of the person and that person's title or relationship to the contractor, right? So, again, those are just some few examples, but I think it's worth pointing out that as a contractor, it is important that you have some understanding of what 31205 says, because you would be required to meet those standards if being audited. Okay. Now, the next topic I want to talk about quickly is the incur cost electronically model, otherwise known as the ICE model. And I mentioned, just a few minutes ago that we have a copy of this on our public website. All right. So again, if you're a new small business, if you've never put together an incur cost submission, then I would highly recommend looking at this, because it's a model, right? It's basically a shell, right? It's a blank shell of all the required schedules. Okay, so instead of developing all this from scratch, we sort of have all of this sort of put together for you. So highly recommend looking at it. It's not required. Okay, so don't think that DCA requires this, because we don't, but we do encourage it, right? And there's a lot of benefits to this. It includes all the required schedules. I really do think the biggest benefit, like I said, is going to be if you're a new small business, or if you're somewhat inexperienced with putting together submissions, then why start from scratch, right? If there's something available out there that you can use as a model, I think that would I think that would just benefit anybody, right? So I really do think that's the biggest advantage. But again, it's not required. Now, these are the required submissions. I'll go through each one of these in good detail, as we move forward in the presentation. So I don't want you to think that you have to memorize all these schedules. All right. So I'll talk about these separately. All right. Okay. So let's go ahead and start this. Let's start with Schedule A. This is the first schedule typically within the incur cost submission. And this is really just a summary of all of your indirect expense rates. Okay. So again, this is, pretty straightforward. It's not very complex. Right. So every company is going to have their own rate structure. In this example, we have overhead G&A, and obviously you want to show the pool, the base, and then the rate. Okay. The rate's just a mathematical calculation of the pool and the base. And so you want to provide that information with each of your rates. Okay. If you're a small business and if you have, let's say, 5 rates, right, then obviously you'd want to show the pool and the base and the rate for all of your 5 rates. Okay. So again, this is going to be dependent on the company and how you operate. Okay. Schedules B, C, and D. So this is the indirect cost pools, right? And again, I would recommend having an Excel spreadsheet for each of your rates. So if you have, if we go back to the example that I used, if you have 5 rates, then make sure you have 5 schedules, the indirect cost pools for each of your 5 rates, right? Now, what does this schedule look like, right? Well, what we're looking for here is the detail for each of your indirect cost pools. And the detail is going to be at the account level. So obviously, your account number, right? Your description, the account description. You're going to have the amount per your general ledger. Okay, there's an adjustments column there, and then the claim column. The claim column is just a mathematical calculation of the total GL amount less any adjustments. Okay. typically your adjustments column will be things like unallowable expenses, right? I would say 9 times out of 10 that it's the adjustments column will be unallowable expenses. Okay, under the reference column there on the far right, what I do recommend, and it doesn't show it here, but what we do ask contractors to do is maybe just include a little note there and let us know why you have the adjustment. Like I said, 9 times out of 10 it's unallowable for some reason, but we do ask they just sort of indicate that there next, in the reference column. Okay, and that's pretty it, right? This is a pretty straightforward schedule. The biggest thing to note is that, obviously if you have 5 rates, make sure you have an indirect cost pool for each of your rates. Okay. Okay, Schedule E, this is the claimed allocation base, right? So very similar to your expense pool. You want to make sure you include your allocation base components for each of your rates. And again, in this example, we just have 2 because we have overhead and G&A. Okay, and the way it looks, the format is very similar to the expense pool. You want to provide the base elements and then the amount per GL, any adjustments, and then the claimed amount. Okay, so I think that's pretty straightforward. So I'll go ahead and just move on. Okay, Schedule F. I'm going to go ahead and just skip this real quick, just because I typically don't see this with small businesses. Schedule F is facilities capital cost of money. This is generally tied into your cost accounting standards. And we normally see this with larger companies that have tons and tons of facilities, right? If you have a lot of facilities, then you can actually get some of those costs reimbursed by filling out this schedule. It's pretty complex, but like I said, I don't really see a lot of small businesses doing this. So for now, I'm going to go ahead and just pass over it. If you do have questions about it, we can talk about it offline, but let me just go ahead and move forward to the next schedule. So Schedule G, again, this is another fairly straightforward schedule. This is your booked and claimed direct cost. All right. So again, we're going to see along the left side the direct cost elements, right? Labor, travel, materials, OTCs, et cetera, right? So whatever you have for your company, we'll have those there. Then the amount per GL, any adjustments, and then the claimed amount. And again, the claimed amount is really just the net difference, less any adjustments. Okay. As you'll see there, this does reference Schedule H, and when we get to Schedule H, you'll sort of see why. Okay. Now, speaking of Schedule H, this is our next schedule. So first, I do want to mention, I realize this is, a very big schedule. This is probably one of the most complex schedules within the incur cost submission. And so when we sort of developed what this would look like, this is what we get, right? It's pretty big. I don't know how well you can see it on your screen, but I'll do my best to sort of talk you through it and kind of highlight some of the things that we want to see on this schedule. So Schedule H, this is essentially your direct costs by contract, okay, and at claimed rates, okay? Now, the contracts are along the left side, and so the first thing you'll notice is all of the contracts generally are going to be grouped by contract type. So all of your cost plus fixed fee contracts should be grouped together. Okay, if you have other flex fee price contracts, they'll be together. Your T&M contracts are sort of grouped together. And then your fixed price contracts and commercial contracts, as we have here on this schedule, it's okay to have just one line item to represent all of your fixed price work and your commercial work. Okay, the reason why we don't ask you to break out those that work by contract is because we don't audit fixed price or commercial work. Okay, so just having a lump sum is fine with us, right? But what's important to note here is that the cost type, all the cost type work and all the T&M contracts, we do audit those contracts. So we are asking that you provide that information, by contract, right? And so obviously you have to show the contract in order for this to be an adequate schedule. Okay. Now, as we go from left to right, the schedule has a lot of different cost elements. Okay, and again, this is going to vary from company to company, right? So you'll provide all of your labor, travel costs, materials, et cetera, et cetera. And again, that's by contract, right? And then when we get to the indirect expenses, so the overhead and G&A, that will be at claimed rates. Okay, the claimed rate will be from Schedule A. Okay, so whatever you have on Schedule A, you want to make sure you're applying that rate on Schedule H, right? And so, I mentioned earlier about the adequacy review. That is one of the things we'll do in the adequacy review to make sure you're applying the correct rates on Schedule H. Okay. Now, once we have all that, right, we have direct costs, we have indirect expenses, right? The final column on the far right there is the grand total. Okay, that's really important because that tells the government the total direct and indirect costs that you are claiming for that contract. Okay, and the only way the government's going to know how to close out the contract is we got to know what is the total amount that you're claiming for this contract, right? Because throughout the year, the government's been paying you, right? You've been submitting invoices and the government's been paying you, right? So that's essentially how we close out contracts is, we got to know what's the total amount that you're claiming versus, oh, well, we paid you so much already, right? And then the difference, the over or under, is the amount that you owe the government or the government owes you, right? I mean, it's a little bit more involved than that, but, at the end of the day, the goal or the objective of Schedule H and the incur cost submission as a whole is to be able to close out contracts. And so this entire exercise, kind of goes towards that effort, if you will. Okay. All right. So that's Schedule H. Schedule H1. This schedule here is a little bit, a little bit funky. I don't know if funky is the right term, but this schedule is really it's really more for the government's interest, right? It's really more for the government's benefit, I guess what I should say. So what this schedule shows is the amount of your overhead base and your G&A base by contract type, okay? If you have, let's say, 5 rates, remember I mentioned before, every company is different. If you have 5 rates, then we're going to see the base amounts for all of your 5 rates, okay? And it's by contract type. And essentially what this schedule tries to provide or tries to show is it attempts to show what percentage of the government participates in your indirect expenses. Okay, so remember I said, we don't audit fixed price commercial work, right? So, if we use that as an example, if we look at the overhead base amount, the fixed price and the commercial, we don't look at, right? But we audit the cost type, the flex fee price, and the T&M. So if we look at those contract types, and if we look at the percentages, okay, and if we add that up, that's roughly, 55%, somewhere around there. So what we're saying is the government participates in about 55% of your overhead expenses. So if the contractor were to claim unallowable costs, the government would only receive, or the impact to the government would be about 55% of the allowable costs, right? So that's a moderate risk to the government. I've seen contractors where 99%, 98% of their expenses are being allocated to government work, and so in that situation, it's a much higher risk to the government. And so, like I said, this schedule is really used for the benefit of the government. Okay, Schedule Y. So this is the cumulative direct and indirect costs claimed and billed. So this schedule is somewhat similar to Schedule H, in terms of how it's built, right? How it's developed. Okay, so very similar to Schedule H, we have the contracts, right? And again, they're grouped by type, contract type. But instead of cost elements, what we're going to have here is these are going to be total amounts, right? So we have a column for the prior year settled cost. We have a column for the prior year costs. We have a column for the current year costs. The current year costs will come directly from Schedule H. All right, the total cumulative settled or claimed. Okay, and then we have the amounts billed. Okay, now what does it mean? What I use the term prior year settled costs, right? What does settled versus non-settled mean? Well, settled cost basically means DCA has audited your costs, right? That we've audited your costs and your rates, and they've been finalized, right? That's sort of the term that we use for settled. If DCA has not audited your cost or your rates, then they're not settled. Okay, so that's sort of the difference between the two, right? And so if we kind of move over to the far right, if we look at the total amount billed, right? In this example, it's 640,000, right? The total amount settled or claimed is 638. So essentially what we're saying here is that there's an over, right? You overbilled the government by roughly $1,800, right? So remember before, with Schedule H, I was saying it's really important because, the objective of this is to close out contracts. Well, Schedule I provides that as well. And if we use the first contract as an example, what we're saying here is the contractor would actually owe the government $1,800, right? And so if you do that, contract by contract, this is really how we get to closing out contracts, right? We got to know how much you're claiming, how much you've been billed, what's the over under, right, et cetera, et cetera. And there's a lot of things that impact this. If DCA were to audit your submission, and if we found question costs, right, that actually impacts the over under, right? And so there's a lot of variables to this, but this is a great start to how we sort of look at closing out contracts. All right. Okay, Schedule J. So this is important if you're a prime or upper tier contractor, and if you have subcontracts that are performing some work for you, then Schedule A is important because you would need to document and provide that information on Schedule J. Okay, and as you can see, I won't go through it all, but you can see the information that we're looking for, right? So subcontract number, prime contract number, information on the sub, right? The value, the period of performance, so on and so forth, right? So this is some information that we are looking for. Again, if you are a prime or upper tier contractor and you have subcontracts, okay? If this doesn't apply, if you don't have any subcontracts, then this doesn't apply, right? This schedule doesn't apply, so you wouldn't be required to submit anything, right? Okay, so let me go ahead and move forward here. Schedule K. So this is very similar to Schedule J, if it applies, right? Because not every contractor will have T&M contracts. Okay, so this is hours and amounts, right, for T&M time and material contracts. And so as you know, T&M contracts, the labor rate is fixed, right? It's negotiated. The contract will actually include, or should include, the list of all the negotiated labor rates. And so what this schedule shows is the labor category and the rates, and then the hours. The hours will come from your accounting records, right? So that's the actual hours. So the hours is the flexible part of this, right? Because it can vary. Okay. The amount is, just a mathematical calculation of the rate times the hours. If you have any material costs or travel costs, we ask that you include that information here as well. Then you have a subtotal and then the total, right? Now, some of you might be saying, hey, Joe, over on Schedule H, you mentioned, you want to show the contracts by type and the amounts, and all the direct and indirect costs, right? Well, you would be right. I did say that. However, the difference between Schedule H and Schedule K is that H is your actual amount. Schedule K for T&M contracts will be the negotiated amount, right? Because those rates, those labor rates are negotiated. That is what you'll bill the government, is those rates, right? So theoretically, you're not going to pay your employee. So if an employee is a program manager, in theory, you're not going to pay them $25 an hour because that's what you're billing the government. That $25 an hour includes overhead, includes G&A, includes fringe, and it includes profit. So what you actually pay your employees will be something else. okay? And that's what you'll put on Schedule H, okay? Hopefully that made sense. If not, let me know and we can kind of talk through that. Okay, Schedule L, this is your payroll reconciliation. Again, this is pretty straightforward. Basically, it is a reconciliation of all of your labor, direct and indirect labor, against your IRS Form 941s. That's essentially what this is, okay? In my experience, we do normally see some variances with this. One example would be just timing variances, which is okay, is provided that you can provide us some explanation for the variance, okay? But you know, really the purpose of this schedule, you know, is we want to make sure that there's no, you know, quote unquote ghost employees, right? So the employees that you actually have on your books is consistent with what you're claiming for tax purposes, okay? All right, Schedule M, this is accounting / organizational changes. You know, I'll be honest, you know, in my 19-year career with Dcaa, I've never seen a small business submit Schedule M. And so, you know, this schedule provides certain things that relates to significant decisions or agreements. If you have significant accounting or organizational changes, that kind of thing. But, you know, like I said, in my experience, I've never really seen this. So I'm not too sure why it's in here, but it is a required schedule if it's applicable, okay? All right, Schedule N, this is perhaps the most important schedule. Out of all the schedules, is probably the most important, right? So this is your certificate of indirect cost. And essentially what you're doing here is you're signing this form and you're basically saying, you know, to the best of your knowledge, all of the costs are allowable, allocable, and reasonable, right? That's essentially what you're saying here. Okay, there is a criteria for who signs this, okay? So we don't want just anybody signing this, right? We don't want the janitor to sign this, but it has to be somebody in a position that is VP or higher, all right? What happens a lot too is because we're sort of in this, you know, kind of digital age. I mean, I know when I first started with DCAA 19 years ago, we still had some contractors submit, you know, paper incur cost submissions. So literally it was a big, like 4-inch binder they were submitting. And so Schedule N was literally just, you know, it was a pen and ink signature, right? You know, but nowadays, you know, everything's virtual. And so what we see a lot of times is they'll sort of sign it, then scan it and send that. And then sometimes they'll send the actual signed version to the office. So I have seen that. In my opinion, I think if you sign it and then scan it in and send that, I think that's more than adequate. All right, let me go ahead and move forward. Schedule O, this is, again, pretty straightforward. This is contract closing information. So if you have any contracts that are ready to close, I would recommend putting them on here. All right. And so some of the information, as you can see, the peer performance, right? The ceiling amount, if there's a fee involved, okay, the level of effort, again, if that's applicable. Some contracts will have an LOE, other contracts may not, okay? And again, if you don't have any contracts that are closing, then obviously you wouldn't have anything to put on the schedule, okay? I mentioned the ICE model. This is where you can find it. All right, again, www.dcaa.mil under the Customers tab, go to the checklist and tools, and it's right there, the ICE model, okay? When you download the ICE model, there's 3 files. It's a zip file, right? And then within that, there's 3 documents. We'll have the manual, we have a model or a template that you could use, and then we have a demo. So the demo includes sample data, so very similar to the schedules that you saw here in this presentation. That's what the demo will have. So, you know, in my opinion, sometimes it's actually nice to have a demo just to kind of see where things go and how, you know, how things flow throughout the schedule, okay? These are some other schedules provided by the ICE model. Again, these are not required, but you know, I think some of these can be beneficial to you as to the contractor. Certainly, it is beneficial to DCA as well. As an example, the contract brief, DCA actually performs their own contract brief, but we do encourage contractors to do that. Especially if you're a contractor and if you have multiple contracts, then it makes it difficult to sort of, kind of track down, hey, what are the special provisions within each contract, right? If you have 1 or 2 contracts or 3 contracts, that's might be a little bit different. But if you have a dozen or so, then yeah, it's kind of tough to know what each contract says, right? And so before you build a government, you want to make sure you're compliant with those provisions, right? I know, a lot of contracts that I've seen will say, G&A is capped at, X%, right? Let's just say 12% as an example. Well, if you didn't know that, and if you submit an invoice to the government and your actual G&A is higher than that, then guess what? You're actually considered to be non-compliant with the contract terms and conditions. So that's where the value of the contract brief. So, I recommend at least considering it. Okay, so I do want to talk about the Contractor Submission Portal, right, or CSP. This is an online application where contractors can easily and securely submit incur cost proposals in one place on a platform that you are already using, right? Assuming you're using PIEE, so Procurement Integrated Enterprise Environment. Most of you, if you are using that, you would be familiar with WAF, Wide Area Workflow. That's where you're required to submit your invoices. If you have DoD contracts, I know DoD requires it. There are some other agencies that don't require it, so you'd have to follow whatever instructions they have. But with DoD, we do require using WAF. Now, currently, or as it stands now, contractors are not required to use the CSP. So what most contractors are doing is just typically you submit to your Cognizant FAO. FAO stands for Field Audit Office. And if you don't know who that is, or if you don't know your Cognizant FAO, you could look it up by using the locator log that I mentioned. But in many cases, if you know your office, and if you've been sending the submission to them year after year, then that's what most contractors are doing. They're just submitting, their proposal year after year to that same office. And so that's typically what's happening now. At least when I was an auditor and supervisor and manager, that's what we would see. But we actually do have this new process now. Again, it's not required, but I think there's some benefits to this, right? So I think some of the benefits to this include, it's a simple online process, right? It's secure. It's a secure platform. It can handle large incur cost submissions. The Cognizant office will get a notification when you submit it. Okay, so, in some situations, not a lot, but in some situations, you might submit your proposal to the office, and because, auditors are busy, there's a lot going on, it may fall through the cracks. I know that has happened once or twice, right? Well, this is nice because the office will actually get notified that you actually submit, right? So there's a lot of benefits to this. Again, highly recommend looking into it. All right. If you want more information on the CSP, you can go to our public website, or you can also email this email here as well, right? The CSP mailbox at dca.mil. Okay. Now, penalties. I want to discuss penalties just quickly here. If DCA finds that you are claiming expressly unallowable costs, then we can assess penalties. Okay, expressly unallowable costs are costs that are, it's just kind of what it says. It's expressly unallowable. So typically, FAR 31205. Remember I said FAR 31205 is very important. If you're not familiar with that, I would at least get familiar with it. But 31205 says there are certain expenses that are just flat out unallowable, like alcohol, right? And so if we find contractors claiming those costs that are expressly unallowable, then we can assess penalties. The contract terms and conditions are very similar, right? So if the contract says you can't bill overtime, Okay, FAR 31205 doesn't mention that, but if the contract says that, would be considered expressly unallowable as well, right? So if it's expressly said somewhere within FAR or the contract terms, then it's considered expressly unallowable. Okay, if you do that 2 years in a row, then we can also assess level 2 penalties. Okay. All right, common deficiencies. We do have a number of a list here. In my experience, generally Schedule N not being signed is a deficiency that I've seen. Also, significant variances, large variances between schedule to schedule is another example that I typically see. Where if we find that, we would say it's inadequate. Okay, small variances. I mean, if we're talking, a few $100s off, that's, and the base is like $10 million, then that's immaterial or insignificant, right? But if we see some variances that are thousands and thousands of dollars, then, it could, we can consider that to be significant. Okay. I do have some frequently asked questions here. I think some of these I might have addressed already, but I think it's worthwhile going through some of these, especially some of you out there might be thinking about this. Do I have to use the ICE model? I think I addressed this. No, you don't. However, it does provide some useful benefits. So we do, encourage at the very least looking at it. Do I have to submit my proposal through the contractor submission portal? Again, no, it's not required, but there are a number of benefits. So again, I think it might be worthwhile to at least consider it, or at least look into it whenever you have time. Okay, this is an interesting one. Can DCA grant an extension for submitting your final incur cost proposal? So the answer is no, DCA cannot grant the extension. However, the ACO, right, your administrative contracting officer can. And so if you look at FAR 42705, that actually addresses the requirement or the criteria that your ACO has the responsibility of not only settling your rates, but also granting an extension for your proposal. Okay, if you want to find out who your ACO is, I would recommend going to DCMA's public website, Defense Contract Management Agency, and I believe it's www.dcma.mil. Okay, when will DCA determine adequacy of my incur cost submission and perform an audit? So this is an interesting question as well. I know, a number of years ago, some of you out there might be saying, hey, there was sort of a notion that DCA was backlogged with our incur cost submission, and I would not argue with that. We were, however, we are now up to date. Actually, I think we've been up to date for several years now. But what happened was the 2018 NDAA, National Defense Authorization Act, mandated a couple of things. Well, there was a lot of things in that, but specifically as it relates to incur cost submissions, what it said was DCA is required to submit, DCA is required to review incur cost submissions within 60 days of receipt, right? So to answer the first part of the question, once you submit the DCA, we have 60 days to review for adequacy, okay? After that, after we review it and determine it to be adequate, we then have 1 year to review it, to perform an audit of the submission, or to issue what's called a low-risk memo. A low-risk memo, essentially, what we're saying is we look at a lot of different risk factors, and ultimately what we're saying is there isn't enough risk there to perform an audit, so we're going to go ahead and just perform some analysis, right? And then issue a memo saying we take no exception to the rates. Okay, that's a whole nother topic. I won't really get into that, but those are the two mandates that we got from the 2018 NDAA. And to be quite honest, that was a positive thing because it did force DCA to get current, and now we are current, and that's really a benefit to both the government and also to contractors. Okay, I'm preparing my submission, and I would like to ask DCAA for some specific questions. Will DCAA give me specific advice on how to prepare my submission? So to answer this question, DCA isn't going to necessarily give you specific advice, but what we can do is provide clarity in the regulations. We can provide you some examples, and we can sort of point you in the right direction, but we're not going to be able to give you specific advice, and that's due to our independent standards. Okay. So, but with that said, I still want to encourage you to reach out to us if you do have questions. Okay. All right, guys, and that's it. That's the end of my presentation. So I think we do have some time to spare for some questions.
Yes, we do have one question in here. It said, are subcontractors subject to DCAA audits or just primes?
Yeah, that's actually a great question. So generally speaking, no, you would not be subject to a DCAA audit unless the prime, the DCAA office over the prime contractor, if there's a need for what's called an assist audit, okay, then at that point you could be audited. All right, and basically what an assist audit is, as you know, right, the prime contractor includes subcontract costs, right, because all that is rolled up into the prime. If we find that a large portion of those costs actually come from subcontractors, then we may request an assist audit of the subcontractor. So if that happens, then that DCA office over the sub will contact you and initiate the audit. But other than that, typically, we're not going to audit subcontractors.
Okay. If anybody have any other questions, you can raise your hand. Or put questions, I'm sorry, into the Q&A section of the webinar. Let's see if there's any other questions. Let's see, we had one question. Is there anything in the chat still? While we're waiting for some questions to come in, I want to thank you, Mr. Greger, for all your insight. I know this is like day 3 of doing the 3rd day of you doing a webinar for us, and we greatly appreciate it to help out.
My pleasure.
Okay. So no other questions out there? There are like 44 participants. Okay, well, it looks like we don't have any additional questions, sir. So, Will, again, I want to thank you for joining us today and having this conversation with us and providing the information to our industry partners. Greatly appreciate it. So again, thank you all for joining us. If you have recommendations for future topics you would like us to present, please forward to us at an email, osbp.pao@navy.mil. As a reminder, a recording of this webinar will be available on our website next week, along with a copy of the brief. So until next time, stay safe and healthy. Thank you so much. Thank you, Mr. Greger.
Thank you. Bye.
Yeah, bye-bye.